Robschild, nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said millionaires don't need astrologers, but billionaires do, and so we begin. Today is Wednesday, June 26, 2024. In today's episode, we'll go through these points one by one, starting with USDJPY. What's that? It represents the value of the Japanese yen to the US dollar, and so when this chart shows it going higher, it means that the dollar is more valuable than the yen, and when it goes down, it means that the yen is becoming more valuable compared to the dollar. Today, specifically, we broke to new highs not seen since 1986. 1986, in fact, November 1986. The importance of knowing what's going on here with this chart is the potential for Japan to basically engage in what they're calling currency manipulation, which has been a threat before. And the idea is that, in Japan they own a lot of US debt. If they were to sell an enormous amount of that debt which they hold, it could send rates higher. And seeing as though so much debt around the world is priced in dollars, it could make yields go up, causing a lot of chaos, causing everybody to have to pay more for borrowing money. And so the implications of Japan dumping treasuries is bad. I haven't seen anything in the news regarding this as being a potential problem. I don't personally think that it is going to be a potential problem, but it is something to look out for and be aware of. If this does begin to happen, it will be causing chaos in markets. How that's going to look, I'm not sure. Will that send the yields of the 10-year, 20-year, 30-year bonds notably higher or not? It's funny, like when there's a rush to safety, including safety in treasury bonds, the ironic thing with yields going up is that the cure for yields going up is yields going up, because when they go up, it's harder to borrow, it's harder for business to do business, and so people take their money out of business and go into treasuries, pushing the yields back down. So I don't see any big problems here. Some people seem to be a little bit more worried about it than I am. I'm not currently worried about this, but again, something to look out for. Wood finally broke today to the downside. This view of wood, W-O-O-D, this is an ETF of a bunch of companies that make wood basically. I've been talking about for the past week or so about noticing how we had this double topping pattern here and consolidating, and I said it looks like it wants to break down lower, and if it does, it means we're taking out this bottom of this double top pattern, which chart pattern wise, this looks pretty strongly like it's wants to collapse here further. This is again one of my favorite leading indicators for where we might expect the economy and markets in general to go. So I think it's worth paying attention to, at the very least, what's going on with wood right now. Micron, one of the semiconductor companies, had their earnings released today at 4 p.m. If you've been watching my show, my videos, you've probably heard me talking about the fact that there is so much speculative value added to NVIDIA and semiconductors in general that it's very, very dangerous levels. It's like if the earnings don't keep going up by like a crazy amount every time one of these companies comes out with earnings, the aftermath, the downward potential of the value of this is enormous. And I have said on here, I'm looking for actually an 80% correction in semiconductors as a whole. A lot of it is only to do with the fact that NVIDIA is not all, it's special, but it's not special enough. There's other companies that make it. They're kind of like the biggest thing on the block, and they have the best things on the block, but other people can make it too. And I like to relate semiconductors to coal, because coal is so boring and it's something that you can just, it seems like it's all over the world and people can just get it. I just want to express that similarity between semi-chips and coal, because they're both things that lots of people can produce. It's not exclusive of only one company or a few companies. As soon as you have enough companies making enough, you get price competition, you get earnings collapsing, all while already we have an enormous amount of earnings growth priced into the price of semiconductor companies. I actually do believe that if this market really collapses, it could function similarly to the dot-com bubble, which sent all stocks down, not just dot-com stocks. Adding to this, NVIDIA being such an enormous part of the S&P 500 itself, funds that hold SPY, that hold VU, that hold the market cap weighted version of the S&P 500 collapsing, you get that momentum. You can not be surprised if everything has a major correction right now. As of the recording of this video right now, SMH in after hours, off of that news on Micron, dropped it 1.1% as soon as the news came out. That's a very large drop. I'm going to show NVIDIA right here, because NVIDIA did not come out with earnings, but the fact that Micron had such much weaker earnings than the market was expecting, it's showing already that not as much money is being made in these semiconductors as people kind of expect. And so NVIDIA after hours is dropping by 1.4% right now. Amazing. One thing that Gareth Soloway has been talking about on his show is how it seems like NVIDIA specifically, I believe, and other semiconductors, the value of those tend to have been tracking pretty well the price of Bitcoin, especially lately. And so with this collapse in semiconductors, I would not be surprised to see more downside in Bitcoin right now. Last headline, Friday, Fed favorite inflation gauge, PCE. Look out for that. I know tomorrow, Thursday, there's some, I guess, political talks going on, somewhat information, so we could see some action tomorrow on Thursday, but Friday is really the bigger, most important thing that's on my radar right now. Moving on through some of the charts, this is SPX, the S&P 500, each bar representing 1 day. I said on last Friday, I believe, that it looked like it wanted to go sideways, and we've been doing exactly that. So me and my crystal ball have been doing well. Again, this is boring, when things are only going sideways, but I think largely we're waiting for that PCE data coming out. I was personally surprised to see TLT today breaking to the downside. It looks like we're forming a channel. It still looks like a bull flag to me, but I have been talking about this. Sorry, I have to reload my page in order for this to work sometimes. I've been talking about this looking like, a wedge, basically. And, I thought that the wedge looked more like this, more specifically, because we had the top of the tail there, and we hit that top there. I thought yesterday we broke out to the upside, and that would send us perhaps even up to the longer term inverse head and shoulders I've been talking about in shows, and instead we broke down significantly by the way that I've been looking and judging these charts. So we'll see what happens from here. Again, until the PCE data comes out, it seems like TLT likely wants to stay in this channel before what I think is going to happen, which is to break out to the upside. With all of the excitement going on in markets, with NVIDIA having so much market cap, I think Amazon came out today as having 2 trillion market cap for the first time in its history. All of this exciting news about the valuations of companies and everything doing so well, you know, under the surface, things aren't necessarily doing so well, and you know, just the CNN Fear and Greed Index is still solidly in fear. But I also wanted to bring up the fact that, you know, the S&P 500, I've been talking about it in many shows as being very overvalued, and it is on a market cap weight basis. But if you look at RSP, which is equal weighted basis, so each company of the 500 companies has an equal part of the pie, it's only just above 20, which is not like, it's not considered, especially in more like the past 25 years, as to be very overvalued like it is with the mega caps that are in there. And the problem though with all of this is that if you have normalization of those mega caps to a normal level, the whole market will likely collapse, similarly to the way we saw in the dot-com bubble. That's how I'm seeing it anyway. To illustrate how much stocks are not performing in general as well as, you know, what you hear on TV with mega caps and everything, I wanted to show a chart of IWM. This is the Russell 2000, so small caps, so smaller companies that are part of the 2000 companies of the Russell 2000. And as you can see, since 2021, we haven't seen a new high. In fact, you know, we are quite a bit lower from that high. You know, 240 down to where we are today, just around 200. That's a pretty significant drop from the highs, and it doesn't seem like it wants to go all that much higher anytime soon. There are many people that use the Russell 2000 as a leading indicator itself as to where the general economy and the market can go. And so if we're seeing, you know, lower highs as we see here, and this continuing, you know, this can also take a lot of things down with it. You know, this along with unemployment going up, with the Fed rate cuts looking like more and more clearly coming in the near future. You know, it looks like, I believe it's August or September, we have like the market's pricing in a cut then. And you know, the cuts, it's like, yes, money's going to be cheaper to borrow now, but oh my goodness, everyone's losing their jobs. Most stocks are not performing all that well, you know, different from what you hear in the news. So I wanted to bring all that up. The last notable chart of the day I wanted to bring up is actually URA. This is a uranium mining fund. I was in uranium for a while. I got out completely pretty recently, mostly because of just thinking about the valuations and how, you know, sorry to all of the uranium bulls out there. Yes, uranium can keep increasing in price. There's a lot of companies that produce it, and yeah, it can take a while to get the production online and all of that, and I understand the bullish case here. But, you know, in the meantime, the big companies that produce this stuff, they don't want the little guys taking any of their profits, so they'll lower their prices to keep them from being able to produce any. And so that there's price control within the market, just, you know, in nature there. But anyway, you know, it's still a fun, I like uranium generally because I think it's a great source of energy, and I think we need more of it in today's modern world. But let's see, sorry, I had to reload. So we have this trend line here hitting 1, I don't know if you count that, 2, 3, 4, 5, we'll count that as 3, 4, 5, 6, and you know, we didn't really break it. We broke it very recently, and so this to me shows that uranium may be, at least URA, may be headed lower here. That's all for today's show. Hope you enjoyed. Thank you for watching. Robschild.